Good morning, everybody. Hey, welcome to Friday, May the 22nd, as we get ready to head into Memorial Day weekend. I hope you guys got big plans, going to take some time down and get rejuvenated over this time period this weekend and try to get rejuvenated a little bit. So excited for the weekend and looking forward to what's going on. But what's going to happen in the markets today? That's kind of an unknown, right? Yesterday we ended up kind of to the downside. Can we finish the week to the upside? That will be the question. We really won't know the answer to that until Tuesday, right? So, but hang with us as we get ready to discuss kind of what's happening in earnings and the economy.
39. 21 here before 9 at light. Let's check in on your money and see what's going on the 401k and IRA that you might be getting a little bit nervous about over the last couple of months. Probably with good reason, too, because things have been herky-jerky as all get out on the stock market lately. Downtown Sebring, we go to the offices of Statler Financial Services, where Phillip Statler is standing by. Good morning, sir. How are you?
Good morning. Hey, doing well. Looking forward to a little downtime this weekend. So happy Memorial Day to everybody out there.
Yeah, in advance, happy Memorial Day. I hope it's meaningful to all, and it kind of scared me. I was doing a thing on Pick Your News a few minutes ago. 43% of the population doesn't even know what we celebrate, what we observe on Memorial Day, and that kind of scares me a little bit.
Yeah, that just goes to show you that American history is not working very well, huh?
Yeah, I suggested that homeschoolers change their curriculum for today and teach their kids what Memorial Day is all about. And heaven hope parents know. That's the biggest thing. Relatively quiet day on the macroeconomic report front, but housing starts came out yesterday, and you said they were about what folks expected?
Yeah, they were. You know, they which is a good thing, I think, at this point. They came in at basically, if I click the right button here, 4.36, and they were expected to be they're expected to be 4.36. They came in at 4.33. So, you know, that's basically right in line with what was expected.
Understood. You happen to have a percentage number on the thing, what kind of a drop or gain it was?
No, I don't. I just kind of got raw numbers right here in front of me.
Okay, well, at the very least, we're performing similarly to what would be expected. And beyond that, it's one of those days where the biggest doggone report that's due out of the federal government today is cattle stocks, and I'm not 100% sure that's going to light anybody's fire. Besides, it doesn't come out until 3 p.m. The biggest thing that I noticed, and I know it didn't light your fire very much, but I found it kind of poetic in an earnings season in which companies across the board are basically all pulling guidance and saying, we don't want to take a guess at what the world is going to be. Overnight, China announced they were pulling their GDP guidance. They don't even have a GDP goal anymore. When a company does it, you raise your eyebrows. When a whole dang country does, especially one that can pretty much decide what they're going to do, that kind of tells you just how uncertain things are, doesn't it?
Well, it really does, and let's face it, you're right. Their number we kind of took with a grain of salt a lot of times anyway, but it does really kind of indicate that they don't want to kind of give any leading indicator of what they think their GDP is going to be going forward. So you know, it's. I don't think that's a very good thing. I mean, we all want to know how we're doing so that we know what we need to do to get better.
Absolutely. And when China says, hey, we aren't even sure we're going to be able to lie enough to make these numbers right, it kind of says something, doesn't it?
It does. I mean, and we need, that's one of the things I think that is important is we need to know what our GDP is, or at least what we expect it to be, so that we know what things we need to be doing to get it turned around and going in the right direction.
Absolutely. China and India are two of our biggest trading partners and two of the biggest other engines in the world economy, and both of them are kind of in a stall situation right now. Most of it, of course, due to the coronavirus situation. Nobody's happy. Nobody's sure what's going to go on, and world can't wait for a solution to this mess, and unfortunately we all know the final solution isn't going to come for at least 6 to 8 months.
Yeah, exactly. It's I'm starting to believe now that it's going to be first quarter maybe even, I mean, it'll be the second quarter before we figure out the first quarter was going the right direction. So I'm thinking that it's going to be the second quarter before we maybe call this recession over.
Yeah, I fear you're probably right in the process. We do have some companies with some news out there, including maybe some surprises this morning, don't we?
Well, we do. We've got some kind of going both ways. Surprises bad, surprises good. So, but we had John Deere report, and John Deere is a staple company around here, a big machine manufacturer. It's big in the construction industry, the farming industry. So it's a big deal when they report, and they came out ahead of estimates.
They do a lot of international trading too, so that counts for kind of a world economy indicator too.
Exactly, and so they came in at $2.11 a share. They're only expected to come in at $1.62. So a pretty good beat there, as well as on revenue. Now they did come in and say that, hey, we expect our sales to fall 30 to 40% this year because of the COVID-19 pandemic, and so that's going to weigh on them, but it's not hurting their stock price today. They're up 3.6% this morning.
That's the only company I think I can remember in all this earnings season that's given out crummy guidance and actually got a benefit on the market price.
Well, yeah, and exactly. And given that they think sales are going to fall 30 to 40%, that's a big dip.
Yeah.
Then we've got a couple of retailers that came out. We got Foot Locker, specialty shoes. They lost 67 cents a share. They were only expected to lose 25 cents a share, so that was a pretty big miss on their part. Revenue also missed. In same-store sales, you might as well kind of wipe that out of here. I don't know why you can even compare that anymore, but because of everything. They did suspend their dividend, which is not a good sign either, but they're trading down 7.75% today.
Ouch. That's on the bad side of the ledger. Any other? You told me that one of the funniest names in shoes actually reported at a pleasant surprise, huh?
So Deckers, that kind of makes sense, right? Deckers, they're the maker of UGG boots. And the sandal company. I never really heard of the sandal company, but UGG boots are pretty popular. They are actually earned 9 cents more than expected. And revenue came in above forecast also. So I guess people are sitting here shopping for UGG boots while they're sitting at home socially distancing. So now they didn't provide any guidance, which is becoming pretty normal now. Let's see if I can find the stock. Oh, here it is. So they stock price, they haven't traded yet this morning. So there's no indication. It did close up yesterday, 3.4%. We talked about, so Deck, that's a clothing or shoe or apparel type company, as well as Foot Locker. So let's take one more look here down that road, and let's look at Ross Stores. Yeah, so they got beat up pretty bad. They were expected to actually make money this quarter. They're expected to make 3 cents a share. And so the big disappointment is they lost 87 cents a share. So a 90-cent swing there. Not good for them. Revenue fell short also. So they're they're struggling a little bit on that front. But for that miss, they're not down too much. They're down 2.5% this morning.
Could be worse given the size of that miss. That's one of that retail category you and I were talking about yesterday that could very well profit greatly from the distress on the big box stores now having to liquidate a whole bunch of stock, both because they're going bankrupt and because they missed a seasonal clearance. They've got to, at the very least, they can't give guidance necessarily and be sure, but they at the very least have a lot of opportunities.
Yeah, I think so. I think there should be some optimism in that stock, TJX, TJ Maxx, that type of company, Marshalls, because they're going to buy deep discounted stuff, and they're we're going to go in there and go buy it at less than normal retail price and get a good deal. They'll make money. Everybody will be happy, except for the people that sold the goods in the first place.
Yeah, exactly. Got time for one more. What do we got to lead the
All
market?
right, so let's look at this one. This one caught my attention. Elf Beauty Supplies. So they actually had a good quarter. They beat expectations by 100%. So they're expected to come in at 5 cents a share. They came in at 10 cents a share. A revenue top forecast also. They do expect that the pandemic has impacted their sales, and will expect a negative impact going forward, probably for the rest of this year when it comes to the shopping pattern of folks. And so they are trading up 0.7% this morning after being down 2% yesterday.
All right. Good news just modifies. Bad news just modifies what would be a barn burner otherwise.
Let me correct that, Dave. I hit the wrong button. They're actually up 11.25% today, which makes a little bit more sense.
That does more. I was figuring the guidance gave us a bloom off the rose syndrome. Setting the table for the morning off day on Wall Street yesterday, Dow was off about 102 points. NASDAQ down about 91. Standard & Poor's was down 23. That would normally be considered a crummy day, but we're almost getting used to shifts like that. We're going into a 3-day weekend where people are going to have to leave some money on the table or get it off the table. 45 minutes before we start making those decisions. Phillip, which way are we going?
A little bit of a mixed bag this morning, Dave. We continue to see the Dow and the S&P 500 rotate in and out of up and down. Still in the green though for the last 30 minutes or so. Did start out red this morning. So right now we've got the Dow up 0.1%. The S&P 500 up a little over 0.1%. We got the NASDAQ basically even. I mean, it's a tinge red, but it is for all practical purposes even right now. On the commodities side, we're seeing a big jump in silver again today, up 1.5%, and we got gold up almost 1% this morning. Crude oil is heading down 3.75% to $32.65 a barrel.
I got a sneaking hunch that's about where it was yesterday, though, so it might be just a retrenchment from a bump during the day.
Yeah, and that could be. I'm not sure exactly where it closed from, where it actually ended up yesterday. I mean, in terms of where it started.
Again, there's another 10 cents a barrel, and or $10 a barrel, and we can actually open up the oil fields in Texas again. Overseas markets, Asia was off last night, mostly off of our problems, and Europe is a mixed bag this morning, kind of like us as they start getting through their day. Somebody needs some help stabilizing one's retirement portfolio, Phillip. That takes an expert, and it takes an unbiased judge as well. You're it. How do I find you on the phone?
Hey, if you need an unbiased opinion on your current portfolio, schedule a time and let's talk about what your X-ray report looks like. Give us a call at 863-382-0037. Follow us on Facebook at Statler Financial Services, where we rebroadcast this report every day. And then catch our radio show 6 a.m. and noon on Saturdays, 10 a.m. Sunday mornings on Highlands News Talk Radio 730.
All righty. That also streams, by the way, at newstalk730am.com. Phillip, thank you so much. You have a marvelous and a meaningful Memorial Day weekend, and we'll catch you Tuesday, all right?
All right. Have a great one.
Thank you much. It's 105.7 Light FM and Statler Financial Services. Phillip Statler. Remember.
Hey, guys, I want to thank you again for joining us. Hey, look, we've seen a run-up in the market. What's the chances that it keeps going? Hey, nobody knows. Nobody has a crystal ball. But all you can do is control the risk in your portfolio. Call us. Let's make sure you don't have too much risk in your current portfolio as we navigate through the rest of this year. Give me a call, 863-382-0037. I hope you have a very nice and restful Memorial Day weekend, and I will see you on Tuesday. Bye now.